Hello, Happy New Year. This is Huskins, your Forex mentor. I'd like to share with you my trade idea and my thought process on trading the manufacturing PMI. Now, you need to bear in mind that this will be the first official trading day of 2013, and we just had news of a fiscal cliff been averted, by the Congress in USA. So the market is going to seep in with this information, which basically should mean that the pound should rally against the US dollars. The US dollar would need to weaken. The reason is that whenever there's crisis, the US dollar gains in strength, and whenever crisis is avoided, the US dollar loses its strength. But having said that, I'd like to share with you my thought process on how I might have or I might trade the GBP USD after the manufacturing PMI is released. One important point to bear in mind is that the manufacturing PMI will be released at 4:28 a.m. So it's not 4:30 like a lot of news releases which are released at the half an hour mark. This is not amongst those. This is released about 2 minutes before 4:30, and I'd attempt to spike trade it at a plus or minus 3 significance. If we get anything over 52.1, I might buy the pound US dollar. I'd accept maybe 10-15 pips, maybe even 20 pips of slippage, but that's about it. And if we get anything less than minus 3, that is 46.1 or lower than that, I might be interested in selling the pound US dollar, or anything against the pound. So pound JPY or pound CHF, they'd all move pretty well, but since the pound US dollar would have the most amount of liquidity, that's a higher likelihood that we might be filled in at a lower spread or a lower slippage if we were to spike trade. In case we do not get a spike triggers hit, what I'd be doing is I'd be trading the reversal of the extremes, the last 24-hour extremes. Let me try and explain this. We start looking for a reversal opportunity from about 4:30. So the news is released at 4:28. For the next 2 minutes, let the market decide what it wants to do. But after we have a significant, the significant direction is already over, or the spike is already over, I'd be interested in trading the reversal of the extreme 24-hour high or the low. Let me explain that. Now this chart which you're looking at is of October. The news was released at 5:28 a.m. Normally it's at 4:28. In October it was at 5:28 because of the daylight savings time mismatch between USA and the United Kingdom. So all said and done, we would be looking from 5:30 in October, and let's note the highest highs and the lows for the last 24 hours. Now I'm looking at the significant highs. So look at this one out here. It's significant, right? This low out here is significant. So these are the extreme swing lows and swing highs over the last 24 hours, and I'm going to trade the reversal of that. So I'm going to expect the resistance level to hold or the support level to hold. So let's see what happened in October. We had the news come out. Whatever the market did, it did, and it went up to the resistance level. So according to my trade plan, I would want to short from 1.6166 area, and let's say a 20 pip stop and maybe a 30-40 pip target. So let's see how this would have played out. So 66, um, we've not even gone 10 pips against us, starting to go in our favor, and it went significantly, at least 15 20 pips in our favor. There we go. We would have reached our target without any pain. Let's look at another date. This is November. Same idea. You start looking from 4:30. So 4:28 is when the news came out. Let me make it nice and big for you. So 4:28 is when the news came out. So this is actually out here, and we start looking for significant highs and significant lows from 4:30. So the truth of the matter is that this particular news candle was the one which was the significant high in over the last 24 hours. Let me show that to you. So you see, this is the high and it is the significant high. So I would want to get short from there. Let's see how this particular trade would have played out. So nothing happens. Nothing as yet. Okay, and there we go. Our entry is triggered in, and let's see what happens after that. The market's moving a little bit against us. We would have got in from about 6166 again, and let's see, a little bit against us, but less than even 10 pips, and here we go. The market moves back down in our favor, and we could have picked up some pips in this process. There. So get in out here at 66, 67, and another 35, 40 pips for you. Let's look at the same thing on another day. This is September 2012. So let's wait for the news to come out. The news comes out at 4:28, and let's see. We start watching the markets from 4:30, and here you go. So from 4:30 itself, we plot the highest high of the last 24 hours. So this would be a significant high. The 4:30 is what causes us to go short from there. I might either consider 4:30 or if I had to give it some more time, I would have missed out on this particular movement, gone short from here, either or. So the idea is we'd be short from 1.5894-ish area, and all in all, there were about 20 pips at least in this particular trade. By the end of the day, it would have yielded us maybe 3-4 pips, but it did have about 20 pips in it. Let's look at another date. Same drill, high and low over the last 24-hour period, and news comes out, causes the market to drop. You buy from the low, and if you buy from the low at 56.24, you have at least 25-30 pips in your direction before it comes back. So this particular trade, let's have another look at another chart just to really cement our idea. This would be on 07. So that is July, the high and the significant low. Let's see what happens. Zoop, zoop, zoop. Nothing, nothing at all. Nothing. And here we go. We get short from the high at uh, 5713 and had a nice from 5713. You have at least about 30-40 pips of profit. So this is a trade idea which I might want to consider. Um, and Though we have to be very cautious about playing this particular idea in today's market environment because of the fiscal cliff news. But having said that, I might want to try it out on my own account. This this video is for education purposes only, and I wanted to share how I think and how I go about uh, analyzing my trades. Thank you so much for watching. Have a wonderful day.